Hello and welcome to the weekly wrap video. A very brief recap of the past 5 days then. It's actually been pretty busy. We're at the height of earnings season with the likes of ExxonMobil, Chevron and ConocoPhillips being some of the highlights, but all the focus has been on that key US data. We've had GDP, FOMC and non-farm payrolls this week. Starting off chronologically then, the Fed did continue their $10 billion taper with a continued reduction of asset purchase, but this was firmly in line with expectations as the Fed still do remain relatively bullish on US growth, but this did not factor out into the advanced Q1 GDP number, which crumbled to 0.1% from expectations of 1.2%. So the weather having a really corrupting factor as exports plummeted beyond expectations, really weighing on the latest growth numbers. Then we filtered through in towards non-farm payrolls on the Friday, a bumper reading for the headline that was 288,000 against expectations of a number around 60,000 below that, with the unemployment rate also contracting to the lowest levels since mid to late 2008 at just 6.3%, but much of this decline was on a contraction of the labour force participation rate, which is now the lowest levels seen since the late 1970s, so multi-decade lows, down at 62.8, with much of that being due to re-entrance, not actually re-entering the jobs market in April, as opposed to actual exits of the labour force itself. So a pretty mixed report. It was initially stocks positive and treasuries negative. However, the stocks increase was quickly paired well ahead of the Wall Street Open. But the futures market's really factoring in an earlier than previously expected rate hike out of the Fed, so those expectations have been brought forward to June of next year from July pre-release. Coming away from the US briefly, we have had some pretty good data out of the UK this week, with manufacturing PMI indicating some strong growth for the latest month, pushing the cable currency pair to levels not seen since mid-2009 and just above that 169 handle not seen for around 5 years for cable. And then just under the surface we have the continued concerns over ECB policy as we're heading towards the policy decision next week. Did have inflation numbers this week which were again slightly softer than expected, but they are not likely to put the ECB on course for further easing, with the broad analyst consensus being for another unchanged rate decision next Thursday. And then finally over in Ukraine, we have seen some further mobilisation of pro-Russian separatist forces in the eastern regions of Ukraine towards the tail end of the week, so do look out for any further developments or possible escalations over the weekend, as Russian forces still do remain just over that Ukrainian-Russian border. Of course, we'll bring you any of those updates as soon as they do hit the wires, but in the meantime, that's all from me. Make sure you have a fantastic weekend, particularly an extended one for any UK listeners joining us today.